But again, this goes to things that I've been reading for the past couple of weeks, like who is buying gold, who has been buying gold, and buying it enough to meaningfully increase the price, right? And yeah, I mean, it's not central banks. First of all, a lot of people have saying that. No,
It's not really.
No.
Yes, I've heard this as
No.
well.
No,
It's marginally. Some central banks are buying have been buying a bit more, but we don't know the most recent data. We know like 6 months ago.
So there is
as well.
there is the I wrote about this in the newsletter, I think. Last week, this was all over the timeline. It was so infuriating. For the first time ever, central banks hold more gold than they do treasuries. This is the end. And then you look into the data, and 90+% of that is just the gold that they have. They haven't bought any really new gold. 90% of that change is just the price of gold rising, right?
Yeah.
So the banks aren't really going out buying more gold, and they aren't selling treasuries. It's just that the price has changed, you know?
Yeah.
So the central banks aren't like the marginal buyer.
Yeah. Either way, it's the reason we're talking about this. It relates to Bitcoin. This whole thing, like why, what we're seeing happening in the precious metals markets is historic. It's people are questioning the system, right? There's a lot of uncertainty, and that's what's driving this insane volatility. And for weeks, people have been saying that that the fact that it's not like moving Bitcoin in the way that silver and gold are being moved is an indication that Bitcoin has failed here, right? But I think just the fact that this craziness is happening, Bitcoin will eventually benefit from this, is how I see it. Or at the very least, it's relevant, right? With these crazy moves, right now they're expressing themselves in precious metals, but the underlying rationale for them is this like deterioration of the status quo. And we know that Bitcoin that's what it's built for, as to be outside of the system.
Yeah. I mean, I
an alternative.
I question that narrative. That I just feel like that it's aided a lot of people, for good reason, hate the dollar, and they hate the dollar system, and they think gold is the antidote to that. But then when you see gold act like this, like a kind of crazy volatile thing, and everyone piles into it, and that to me makes me question, at least in the short term, like what's going on here, right? So what, like we started at the top of the show, I think Monday morning in the U.S. is going to be a very key moment, I think, for this. Like, so because of the amount of market cap lost here, you could imagine this being something like 10/10 was for crypto, October 10th, where, of course, it's normal for retail to get fleeced and lose all their money during
yes, of course,
market events, right? But what happened in 10/10 in crypto was that the so-called smart money, they lost their shirts, right? And pretty much everyone agrees that crypto still hasn't recovered from that. It seems kind of amorphous why. We don't really know why, but it seems clear that it still hasn't recovered, right? You can see it in lots of graphs and data. The question, I think, is, did some major smart money, market makers, banks, hedge funds, did they get liquidated on this, or margin called, or whatever, compromised in such a massive move? And if they did, will they have to start like selling assets on Monday to meet those margin calls? That's, to me, the question.
Right, and well, we'll find out soon.
Yeah, we'll find out soon. Now, obviously, we can switch to Bitcoin now. Bitcoin had a pretty rough weekend. Thursday, Friday, Bitcoin collapsed through the kind of 88,000, 90,000 level. It was kind of going around for a couple weeks, and it nosedived over the weekend into the upper 70s. It reached its lowest price since April of last year, going down. On Saturday alone, you had your kind of classic liquidation-driven flush. 1.14 billion in leverage positions was wiped out in 1 hour. And over the 24 hours, there's about 2.5 billion wiped out so far. And here we are Sunday night going into Monday morning. Obviously, if the markets react to this gold move negatively, I think Bitcoin will follow. And I think this could be the case where, let's say the markets react negatively. I'd imagine they react negatively because organizations, institutions are trying to raise capital to meet margin calls, and they'll sell off their Bitcoin positions as well to do that. So, I mean, you could see this kind of go down a bit more. That's like the negative outcome. Positive outcome, markets rebound. The question here, Graham, is let's say markets go up. Does Bitcoin go up too, or does it still continue with this decoupling where the markets respond positively? You see like equities and gold metals go up. Does Bitcoin just kind of linger down still?
Yeah, that's the question. Eventually, my feeling is that we're getting close to a bottom here on Bitcoin, and people are going to start to see the value.
Why is it just a hunch, or do you would point to anything for that?
Well, technically, it's getting close to that 200-week simple average. There's been a lot of FUD. You see more and more people just dunking on Bitcoin. Just all of those factors start to add up to kind of a bottom.
Yeah. When have you deployed any dry powder yet, or are you still waiting?
I did at higher levels, and now I'm starting to look carefully.
Yep, it's I mean, I agree with you. I think we're starting to get to, what is it, 74.3 thousand. So yeah, we're getting to the point where we're going, like, we can get to quite low levels. So I think it is looking good. But I mean, dude, it's it's going down. Do you want to go through some of these reasons why maybe Bitcoin in the short term has gone down?
Sure.
Particularly?
Let's do it. So we have this excellent article from Jamie Redman. 3 reasons Bitcoin buckled as January closed, and they are institutional and miner sell-off. This one always kind of bothers me. Why did the price go down? Because people sold. Yeah. Okay. Sorry, Jamie.
No, but it's not people though. It's specifically institutions and miners, right? Like that's
okay.
Driving.
So I mean, miners they have to sell once because their inputs, the cost of obtaining Bitcoin is significant. They have to cover their costs, and it gets into this spiral, right? And so they just have to keep selling.
But
yeah.
The game for miners is like oil, though. The whole point of why miners and like oil people are the same is you make all your money during like 3-4 month bull runs in oil and in Bitcoin mining. My guess here is that miners have held for a lot of like 2025, and they didn't sell when they should have, like in October or November, and now they're kind of forced to sell at low prices because they're running out of money. So slight mismanagement, right? Like you don't want to sell at this price. That's the whole point. Miners really don't want to sell here, but I guess some are being forced to.
Yeah.
You want to sell. You want to sell when it's going up. Like when it's going up, that's when you're supposed to sell.
Yeah, it's buy low, sell high.
Yeah,
Sage advice.
Sage advice. Hard to do. Hard
Yeah.
to do.
Beyond that, there's the Iran conflict, geopolitical tensions. Here, I think the thesis is that, like Bitcoin is, despite what people claim is the narrative, is that, it's like a geopolitical hedge. Actually, it's just a risk-off asset. So when you see geopolitical tensions and risk heightening, then Bitcoin's the first to sell off. I think that's the idea here with why U.S.-Iran conflict and geopolitical tensions would be a factor for Bitcoin's demise here over the last month or so, several months. And then, there's the Clarity Act, that thing looking increasingly not like it's going to get passed. And then we have the government shutdown, which the government shut down apparently in the U.S. again on, Friday? And it's unclear how long that'll happen. The last shutdown was like the longest ever.
Yeah.
Maybe.
Yep, it was. This will be longer still, my guess.
Okay, so we get a longer government shutdown. That can't be good. So people anticipating that, and so
and a long government shutdown, it just delays the Clarity Acts. Even if you have like the most optimistic view of the Clarity Act, a government shutdown, obviously there's going to be zero progress with that, and so it just adds a little more uncertainty to whether Clarity is going to be passed anytime soon, thus preventing institutional capital to really like go into new institutional capital to come into crypto markets, because why would you do that when there's risk that there's not going to be clear regulation from Congress, not like from the president.
I think the Clarity Act doesn't really affect Bitcoin so much. It's more about crypto. Bitcoin already has decent regulatory clarity. Anyway, should we move on to a little stablecoin talk?
This also ties into Bitcoin if you want. I mean, like the another one. This is a different article, but one thing that could be causing the price of Bitcoin to go down and crypto in general. By the way, I looked this up before we started the show. Bitcoin has gone down like as of right now like 14%, something like that, in the past like 3 days. If you look at the total market cap of crypto, excluding Bitcoin, it's gone down about 15%, which is surprising to me, right? Bitcoin and all other altcoins going down kind of the same amount. Yeah, usually you see alts go down significantly more. So,
I think that could be an indicator that could also be an indicator that we're near the bottom, because non-Bitcoin assets have already sold off so much they can only sell off basically at the rate that Bitcoin sells off at this point.
Yeah. So anyway, why might Bitcoin be going down and all crypto assets be going down? Stablecoin outflows, right? So Graham, you and I have talked about this for several years now. Stablecoin flows have been one of the better indicators of what's going to happen with price, or to explain why price is going up or down. And we've also talked about, especially for the past year, how this might have changed. Like this indicator might no longer might mean anything, because stablecoins have found actual product market fit, real utility, real adoption. And so you could have continuous inflows. You could have continuous stablecoin inflows, but those flows aren't actually going into buying anything. They're being used by companies, right?